Welcome back to our weekly market analysis, where we dive deep into the candlestick signals that shape the market landscape for the week ending September 5th, 2025. I'm your host. And today we were going to uncover the hidden messages behind the price action that could potentially influence your investment decisions. So, buckle up and get ready for a roller coaster ride through the sectors that made waves this week. Let us kick things off with a sector that has been turning heads and setting screens ablaze: technology. This powerhouse led the charge last week, flexing its muscles with an impressive gain of 7.9% and a staggering market capitalization change of $57 billion. The software and IT services sub-industries were the star performers, each notching up increases of around 8.2%. Not to be outdone, hardware and storage chipped in with a solid weekly return of 7.1%. But here's where it gets really interesting. Last week, the technology sector formed a bullish continuation candlestick pattern. Now, for those of you who might be new to technical analysis, this is like a green light for investors. It's a positive signal that suggests the current uptrend is likely to keep on trucking. In other words, the buyers are still firmly in the driver's seat, pushing prices higher and higher. It's not just a flash in the pan. The technology sector has been showing strong momentum for quite some time now. As we look ahead, there's a real possibility that this positive trend could continue in the near future, potentially reaching new highs. Keep your eyes peeled on this space, folks. Now, let's shift gears and take a look at the basic materials sector. While it might not have stolen the show like technology, it still put in a respectable performance with moderate growth. Some of the standout performers in this space were materials stock leaders like Newmont and Agnico Eagle Mines, both of which posted strong gains. Overall, the basic materials sector saw its market cap move in a positive direction throughout the week, reflecting ongoing demand for core commodities and industrial resources. To put some numbers on it, we're looking at a 3.8% increase, which translates to a market capitalization change of $28 billion. Not too shabby at all. But here's where it gets even more intriguing. On Wednesday, we saw the formation of a bullish engulfing pattern in the basic materials sector. For those of you who might be scratching your heads, this is a candlestick pattern that often signals a potential reversal of a previous downtrend. It's like a beacon of hope for investors who've been weathering a storm. Moving on to communication services, this sector emerged as one of the week's top performers, riding high on robust year-to-date momentum and favorable economic drivers. The sector registered an impressive gain of 6.5%, translating to a market capitalization increase of $42 billion. A notable bullish harami pattern formed on Thursday, suggesting a potential continuation of the uptrend. The industrial sector also flexed its muscles this week, matching communication services with a 6.5% gain and a market cap change of $51 billion. A three white soldiers pattern emerged over Tuesday, Wednesday, and Thursday, indicating strong buying pressure and the potential for further upside. In contrast, the utilities sector found itself lagging behind, reflecting a clear investor rotation away from defensive stocks. The sector experienced a decline of 2.1%, equating to a market capitalization loss of $15 billion. A bearish engulfing pattern formed on Friday, hinting at possible further downside in the coming week. The energy sector saw marginal improvement, closely tied to oil price fluctuations and supply dynamics. It posted a modest gain of 1.2%, resulting in a market capitalization increase of $9 billion. A doji candlestick pattern on Wednesday signaled indecision in the market, with the potential for a trend reversal in either direction. Financial services, consumer cyclical, and consumer defensive sectors all posted modest performance shifts in response to changing consumer sentiment and policy signals. Financial services saw a 2.8% increase, $35 billion market cap change, while consumer cyclical and consumer defensive registered gains of 3.2%, $41 billion, and 1.5%, $12 billion, respectively. Hammer candlestick patterns were observed in all three sectors on Tuesday, potentially indicating a bullish reversal. The healthcare sector experienced mixed movement as fundamentals and global demand trends shaped valuations. It ended the week with a 1.9% gain, translating to a market capitalization increase of $22 billion. A bullish Marubozu candlestick on Thursday suggested strong buying pressure and the potential for continued upward movement. Real estate saw a modest decline of 0.8%, equating to a market capitalization decrease of $5 billion. A bearish hanging man pattern formed on Wednesday, hinting at a possible trend reversal to the downside. Now, let's talk about some of the key drivers behind these market capitalization movements. Economic factors played a significant role this week. With the Federal Reserve's anticipated rate decision and the ongoing impact of tariffs being major influencers across most sectors, large cap and private companies within the technology and industrial sectors registered notable valuation changes, illustrating the influence of both macro and company-specific news on market cap dynamics. For instance, in the technology sector, we saw a major software company announce a groundbreaking AI integration, causing its stock to surge 15% in a single day. This contributed significantly to the sector's overall performance. Meanwhile, in the industrial sector, a leading aerospace manufacturer secured a multi-billion-dollar contract, boosting its market cap by 22% over the course of the week. It's worth noting that the price action we've observed wasn't evenly distributed throughout the day. In the technology sector, we saw the highest prices around 2:30 p.m. Eastern Time on Thursday, while the lowest prices were recorded just after the opening bell on Monday. This intraday volatility underscores the importance of timing in investment decisions. For investors looking to capitalize on these trends, it's crucial to consider how these sector performances might influence your investment strategies. The detailed breakdown we provided can serve as a valuable tool for both seasoned professionals and those just starting to follow weekly market changes. Remember, while candlestick patterns can provide valuable insights, they should always be used in conjunction with other forms of analysis and not relied upon in isolation. It's also important to keep in mind that past performance doesn't guarantee future results. As we wrap up this week's analysis, it's clear that the market landscape remains dynamic and full of opportunities for those who know where to look. Whether you're interested in riding the technology sector's continued momentum, exploring the potential reversal in basic materials, or capitalizing on the strong performance in communication services and industrials, there's no shortage of options to consider. Stay tuned for our next weekly market review, where we'll continue to bring you the latest insights and analysis to help inform your investment decisions. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is, and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.